So I guess we're all here. How many people in the room? About 100. Cool. Then let us get going. It is what? It's a Wednesday? It's amazing. Amazing. I've had such a long week. It's a Wednesday already. Woo! Well, what goes on Wednesdays? Oil inventories. So Canadian dollars often a good thing. But really, we'll look around the world, right? CAD was weak yesterday. Maybe it's going to be weak, or maybe it's going to be strong today. Why? I don't know. Maybe it's simply because of things like oil inventories, right? The news that came out yesterday, it wasn't good, and so we scalped the CAD short. Did anyone like doing that, by the way? Did you enjoy scalping the CAD news yesterday? Setting it up all the way down on the 1 minute channel, catching the pullback, letting her run, having me call out when to move your stops, that kind of stuff. That was good. Did you leave a little thumbs up? Huh? Click the thumbs up, guys. So anyways, we got some currencies to do. Right? We got the dollar pairs, we got the yen pairs, we got the Swissy pairs. We got gold, we have oil, look at some exotics, crushing it on the exotics, right? So it should be a very exciting day. Stay tuned, let's go! Hey, look at that! Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So, g'day, mate. Good to see you. My name is Wayne McDonald. I am the Chief FX Market Strategist for Traders Way. Please visit tradersway.com. Open up a demo account. Open up a live account. Demo accounts just take like 30 seconds, bro. When you're in the back office, lots of cool things can happen. One of the things you could do is download MT4. Nice. So once you got that open, you can trade on the standard MT4 account. You can check out the execution speed. You can check out the spreads. You can check out the amazing, ridiculous, amazing swaps at Traders Way. Did I mention Traders Way pays you amazing swaps? So you can check all that out. But then you're like, man, this MT4, it's not as good as what Wayne has. Oh, well, why don't you take all my chart templates, the indicators, the EAs, the profiles, everything that I use here, you can download them and put them into your MT4 account. Okay, the link to that is in the description below. And I got an email late last night from the programmer, said that he went through every single of the standard indicators and templates and profiles and EAs and converted them to MT5. So I need to test those out, but I'll be uploading that very, very, very soon. And then the complete Traders Toolkit has even more goodies inside, actually 12 more goodies inside. So I'm going to pay him money and have him go through all those other 12 indicators and create all of those and get those up. And that'll be good. And then I want to go through and find time and go through and create sort of how-to videos and why and wow and little mind maps and stuff for each one of those setups. So just so much to do, so little time. But anyways, it's all there. They're all resources for you. Thank you, Traders Way, for everything that you do. I love you, Traders Way. Gone viral in Africa, want some fractal geometry? Why not some chaos theory? There's a video in the training course that I did in front of a live audience of, I don't know, 500 or 600 people in Las Vegas, I think. And it covers chaos theory and fractal geometry. Actually, the other way around, fractal geometry and chaos theory. I believe it's called Advanced Forex Trading. That's in the trading course. That was fun. So if you happen to be a member of fxbootcamp.com, look for that. Oh, wow, I'm exhausted. All right, so cool. We got everything. And by the way, you may notice now the chat is easier to read. I got some feedback by a few people saying, hey man, it's hard to read the chat that's posted in the video, not the YouTube chat, but the recording or the whatever of the chat. And there it is now. So it's nice Forex.Today colors. Yes, people care about such things. All right, so anyways, let's go pound, meh, right? Pound is meh, euro is meh, Aussie, Kiwi. If you're a R2D2 fan, okay. Then Swissy, meh, dollar negative, but popping up. Yen was negative, but popping up. So anyways, so what we want to look, right? What do we want to do? Well, Asia Pacific's doing very well, and dollar's fairly weak, so that's good. And then Canadian dollar's strong, so right away you could say all commodity pairs are up. So is that a good thing for macro or a bad thing for macroeconomics? Oops. Oh, that's the wrong thing. Yeah, it's a good thing. Demand for commodities seem to be going up, and that's typically a risk-on play. You know, and of course, yesterday, the stock markets in the United States of America hit all-time highs again. Told you, the rich get rich. No, it's good. It's good. Increase in demand for commodities means there's macroeconomic activity. You got to feed the beast, and what do you feed it? Commodities. Lim says, hey, Wayne, would you give some... I can't read that whole chat. Hang on, I got to move something around. There we go. Can you give some weightage for ISM manufacturing PMI? Well, ISM manufacturing represents about 9% of the U.S. economy. ISM non-manufacturing represents everything else, approximately 91. So which one do you care more about? You hear a lot about the manufacturing stuff in the news, like, oh, the manufacturing sector's kind of China. Yeah, it's because they make better stuff. Oh, you're not supposed to say that. You're not supposed to say that. Well, dude, whatever. So I do know people in America that own companies that manufacture things. And I remember one time we were in Home Depot. And we were just cruising around. I can't even remember what we were doing in there, but we were looking at stainless steel barbecues. He's got one this big. Mine's about a foot bigger. That's all that matters, right? But anyway, so we're looking at these things, and they're, they're fairly expensive. You know, it's nicest that Home Depot has. Let's say $1,000 or whatever for a nice barbecue. And he's like, you know what? He's like, I buy this stuff raw material, right? I buy rolls of stainless steel. He buys tons of aluminum. Okay? And he's like, you know what? For the amount of stainless steel and other material that's on this barbecue for $1,000, he says, if I just bought the material, it'd be $1,000. I haven't turned it into a barbecue. All right, I haven't made the pieces. I haven't paid someone to assemble the pieces. I didn't pay someone to ship it to Home Depot, right? He's like, if I just bought the stainless steel that went into this barbecue, that would be my cost. What you're buying the barbecue, you got the manufacturing process and the manufacturing plant, right? And the assembly and the shipping and everything. You get all that value for free because someone has made it so cheaply. Of course, obviously he didn't make 200 million above the barbecues, the per unit cost drops. But anyways, he's just like, there's just no way I could make this thing for this kind of money. And that's why it goes offshore. There you go. And after doing that for 30 years or more, offshore manufacturing is fantastic and modern and heavily invested in. So whatever. All right, so let's take a look at commodities. Let's take a look at, you know what? Let's start with high yield. Let's do high yield. Check it out, check it out, y'all. Look at that beautiful sell from the other day. Happy with that one. That's been 2 days. And if we were to add that up in pips, which one is that from yesterday? Yes, 2 days ago. $6 in swap on a $100 investment, and I've made $180 in profit on a $100 investment. Well, 100% per day, 200%. 200% return on investment since basically yesterday. Cool. So I'm liking that. That was a good one. Making the music. But here's the thing. If I do nothing now, I'm guaranteed to earn 3% a day. How'd you like to earn 3% a day in the stock market? Remember, 3% a day, 7 days a week. So that's, let's dumb it down. 3 times 365. Well, if it was 3 times 333, right? That's basically 1,000% a year, but it's a little more than 1,000. So if you calculate it out, it's 1,100% a year minimum. That's if I made no pips. At the end of 1 year, I got knocked out of break even. I still collected 1,100%. That's pretty nice, man. That's pretty nice. The point I actually want to bring up was this one, was that we've hit the target, 2 or 3 days ago? And I've been telling you, you're supposed to get out, you're supposed to get out, you're supposed to get out, you're supposed to get out. Well, look, now it's more up than it is down. So told you so. And then Eurozar, this is the one we set up months ago. And it's just monkeying around. But there's the entry. There we are. I'm hoping it goes really based off of next week. I'm hoping the next move is sort of like this and then like this. Does that make sense? Where do you get that index? The index you get from metatraders.com, and you purchase the complete toolkit. Cool. Okay. Let me get my drawing tool going since I had to reboot. Michael says, can you briefly cover high yield fundamentals? Yes. The brief is when there's risk on, investors are willing to seek high yield in emerging markets. Okay? And therefore demand for their currency goes up. When the mood is risk off, people don't want to invest their money around the world. They want to bring their money home. So they pull their money out of emerging markets and the currencies weaken. That's as brief and as basic as I can make it. Okay. All right. Good. Got my drawing tool. So anyways, oops, delete. So here's the plan that I got going. Okay. So I need to keep that up. I'm not nervous about it until the 3rd week of November. And that's when I'll start getting, oops, didn't want to do that. Gee whiz, tough day, man. Turn that off. So I'm going to do a regression study. And yeah, all right. So we're at the mean. We'll see how it goes. I wonder if I study it from this point. Well, I get that. I still want to do it this way. Yeah, I'll do it that way. All right, cool. So anyways, nothing new today. So it's just continue mission or not. Let's take a look around the world here. Oh yeah, well everything's seasonal. Not specifically Eurozar, specifically human behavior. Okay. So when I'm talking about seasonality, I'm not talking about the farmer's tastes and preference. I'm talking about Mother Nature. Okay? All right, so kitty cat, kitty cat, kitty cat. Well, first let's take a look. There's a slow climb for oil. Unfortunately, we're caught on a sell zone, and yet I want this to go up. So that's a real bummer, this being the sell zone. If you're a bear, you're definitely looking at this. And you can see there's a lower low, lower high, lower low scenario. So if you're a bear, you probably took that already, right? So you get this low lower than this zone. So let's mark the zone a little bit. Let's do a blue color. Okay. So you're, as a bear, you're playing this, and then you go back. You notice you breach it. So now your next strategy is roll reversal off the pivot, which you got, and the rest is now a lower low. So then it makes a lower high, which makes a lower low, which makes a lower high, which makes a lower low. And that's what you're stinking, okay? And I've been telling you that this market is quite neutral. And one example of this is where bulls would buy. We knew that on when the market opened on Sunday. So we knew buyers would be here and we knew sellers would be here. And yeah, buyers were there. Sellers were there. And look at the neutral price. Isn't that funny? So if you're a bull and you want this to go up, you might want to start thinking about it. The problem is this is a trend trade, and yet we're in a range-bound market. So you don't really have congruency in your analysis, right? I mean, you might want it to go up, but this is not an uptrend. It will be an uptrend if it breaks this level, makes a higher high, but it has not done that. So don't force it. So this is where you're disciplined and you wait. Okay? Who would like me to cover gold? Where are my gold bugs? Michael says, is knowing where the buyers would be covered in the swing trading course? Of course, that's the whole point. SWS took the dollar lira trade. Yeah, that's interesting, especially with the dollar now being weak. It's still a higher carry. Like euro has negative interest rates, right? And the US has positive interest rates. But at some point, it's all good, right? Okay, my coaching account is 36,600. Someone asked me what the trading account size is. Okay, lots of people say gold, so let me go into gold. By the way, did you click the thumbs up on the video? There's approximately 120 people that have not. So if that's you, I believe your mother would be very disappointed in your behavior. And you don't want to disappoint your mother. She deserves better. Thank you. Okay. Gold! Nothing happening. There you go. There's my analysis. So this goes back now. We've been doing nothing since like June, July, since summer. We're flip-flopping around 1,500. Nothing very interesting. No real trend. Tight pivots. When you hit key pivots, nothing happens. So there's just really not a lot of demand. The monthly buy pivot is here. So buyers bought it. The weekly buying pivot is here. So that's where the bulls are. The bears sold at their monthly sell pivot, which is here. And we're now at the weekly sell pivot. So I don't expect much of anything at all. And my job is to if something's going to happen, let it happen. Okay? It's not my job to try to make it happen. I ain't that big. Okay? So I don't know how you want to look at it. Like you could measure it this way, or even more recently, you can look at it this way and like just look how tight that is. Look at the difference in standard deviation since the month of September. And what is it now? Let's do the month of October. Okay, look at the difference in standard deviation. So we'll take two standard deviations here. Okay. Okay. Here's one standard deviation for September. And now let's do this, the distance between these two deviations. Two being one positive, one above the mean, one below the mean. There's two standard deviations. Look at the difference. And right? What is that? 1, 2, 3, almost 4. Right? There's only 25% of the range month over month. So no, that's not the kind of market conditions I'm interested in risking my money in. Okay? Does that make sense? Hey, Deborah. Deborah's new. Welcome, Deborah. Yeah, Jimbo says the account's about the same for a long time. Yeah, that's my coaching account. Yeah, Hakeem says, I didn't know you could trade gold with Forex. Yeah, in fact, gold and oil, they're actually sort of derivatives. So not actually sure how they do it. So you're not trading physical gold. You're not trading gold futures, but it's some sort of indice against the dollar. And I'm not sure how they do it. And it's a curious thing because, like, if you go into here, this is really curious, right? And you go to gold, and by the way, there's silver in here too if you like metals. But let's do gold, XAU. Check this out. If you're short gold, it pays you a positive swap. Huh. I didn't know gold paid interest. Right? And of course, there's a negative if you're long gold because you're shorting the dollar. But it's interesting anyways that you earn or pay interest on something that is a derivative of an asset that isn't tied to interest rates. So how they do it has something to do with currencies and something else, but I never really looked into it. It's the same. Danielle says, hey, I want to specialize in US dollar. How do I do the research exactly to decide if I'm a bull or a bear? Go and review many of the Federal Reserve Bank websites. The Federal Reserve Bank of St. Louis is fantastic. I believe the Federal Reserve Bank of San Francisco is pretty good. You might want to sit on the Board of Governors website for a while and check out their website. But that's all you need to do. Let the central bank tell you what they're going to do, because the central bank manages monetary policy, and monetary policy directly impacts the value of the currency through supply. Okay, oh, my pleasure. Alrighty, so not really interested in risking money there. Even oil's a little bit slow, but we got positive commodities, right? So let's take a look at Kitty Cat now, because that move, the index was over the 4-hour period. SWS, the Europeans, including the British, are excellent. They're experts at kicking the can down the road. I'll never forget the day that Draghi at the ECB said that their new plan was to do less for longer. And I'm like, wow. Wow. So anyways, yeah, less for longer. Yeah, so no Brexit. Yeah, not shocking. Rob says, look at all the stupid moving averages. Okay, let's get rid of them to make Rob happy. Okay, Robbie? No moving averages for Rob. And I'm okay with that, man. Moving averages are stupid. But they are just little lines on the charts that do tell you useful information. But are they required to trade? No, of course not. They're more like training wheels. They're just tools, in fact. They're just tools, right? So Rob might drive a tractor with a ditch digging tool on the back. That's cool, but doesn't make my shovel stupid. It just makes it a different tool, that's all. All right, cool. So let's take a look in here, Robbie. By the way, Rob, are you still with me, or are you just here to heckle? I'm happy to go in it. I'm happy to go through it using nothing but price action. Okay, cool. Right on, Rob. So what we use here, so I'm looking at CAD, by the way. I'll have to put the watermark on here. For some reason, it's not on this version. But let's take a look. We got Kiwi CAD at the top, CAD Yen. So that's no good because the one's on the denominator, the other one's on the numerator. This is on the numerator, and this is on denominator. So let's move this around. Sometimes a platform does that. It automatically rearranges and not to my liking. And it does that when you click that button there. All right, so CAD on the numerator, CAD on the numerator, CAD on the denominator, CAD on the denominator. All right, so with all things being equal, and I always hate when my professors say that because I'm like, what do you mean all things being equal? Let's say we believe the Canadian dollar is strong, okay? Then if all things being equal, they should be doing this, okay? So what's the first thing you notice? Yeah, all things are not. Well, first of all, that's what I expect. And all that means is if the two currencies on the top go up and the two currencies on the bottom go down, all that means is the dollar is strong relative to the other currencies. Kiwi is stronger than CAD. Bravo, Jimmy. That's it. Jim's got it. So we have an assumption that the Canadian dollar is strong, but whoop, Kiwi is even stronger. So you can look at this and say, all right, you want to put together a commodity play today, right? But start with Kiwi, then go to CAD. Oh, snap, right? Snap. Oh, snap. So that's cool. Right on, Chuck Duck. All right. Okay, so that's the first thing. Now, if you are a bull, let's put together proper entries based on pivot strategy, not moving averages, right? Rob is correct. Moving averages are lagging, and therefore, by his definition, stupid. Well, I might argue against it, but I know what he's saying, and he's not wrong. All right, Jim? Rob? I'm not saying Rob's wrong. Cool. So here, all we're using is leading indicators. Leading indicators being price action, leading indicators being pivot points. Okay? They're predicting the future. Okay? So check this out. Based on that, on a weekly, well, let's do monthly swings. This is the bullish monthly swing long. This is the bullish monthly swing long. Okay? This is the bearish monthly swing. Notice how it's not quite right and all that kind of stuff. And then this is the monthly bearish swing. Okay? And this is straight out of swing trading. Okay? Now, let's add to this. What is this week's weekly swing? This is the weekly swing. And there's the target for the week. This is the weekly swing. Not quite there. That's how strong CAD is. Okay, this is the weekly swing. And notice we never got it. Why? Because Kiwi's stronger than CAD. And this is one reason I don't trade commodity currencies against each other. I may have never traded Kiwi CAD. I might have, but very rarely. Okay? Emotionally, I would tell you I've never done it. I probably have, but I didn't like it. I remember doing webinars on trades that I made money on that I didn't like, right? That would be an example of like, why would I trade two commodities against each other? It just makes no sense to me. And then this week's weekly swing didn't quite get it there. So we only got one weekly swing. Okay? Too bad, so sad. Now, where is it that we're going if you're a trend trader? Because that's the ultimate question. Well, let's get out of a 1 hour chart and move to a 4 hour. So somebody asked me earlier today about fractal geometry. This is what we're doing now. By me moving through time frames, we're looking at fractals. Now remember, this is my version of fractal geometry. I'm a self-taught trader because when I started trading Forex, there were no books on how to trade Forex, and there were hardly any books on technical analysis. So I just sat down and figured it out. Okay, so I call fractal multiple time frames. I call multiple time frames fractal geometry because when you look at fractal geometry, okay, imagine you're looking at a picture. And every pixel in the picture has all the data of the full picture. And whenever I think of this, I think of Blade Runner. How many people have watched the original Blade Runner? Okay? There's a scene where he's looking through a picture, but he's using a computer. And the funny thing is, this is before computers. Okay? So he had a computer, but an actual printed picture. So like digital cameras didn't exist, but computers, right? Like in the movie. So it's pretty funny. So anyways, he throws down a picture, the computer scans it, and then he says, zoom in, and it goes, and he's looking around the picture and he's looking in the background. Well, it would go in. And by the way, there was no mouse or anything. So he'd have to say, go in the upper quadrant, zoom in. No, move to the right a little and zoom in further. Like, it was great, right? No graphical user interface, but he could do this. But what he could do is he could indefinitely zoom in on a picture and it would always be at full resolution. That's fractal. Every pixel has all information, so you can keep going deeper and deeper and deeper and have the all information, okay? Fractal geometry that's how I thought about it when I was teaching myself how to trade. You have the price-time continuum, okay? For example, here's one chart. There's the price, right? And there's the time. Price, time. So what's the price here? And if I change the time frame from daily or change the time frame to a 1 minute, the price and the time are all there. All information is involved on every plane that you're looking at. The price time continuum plane. Okay? So using sort of physics now, or quantum physics, this is the theory of relativity, right? Where your point of view, the information is relevant to your point of view. So like when Einstein, he says, well, if you're on an asteroid or whatever, right? A spaceship, if you will, but let's say an asteroid, and you're moving this direction at such a speed and at such a trajectory, and then you're observing something else moving at a different speed at a different trajectory, and then someone on Earth is observing you and them. Everyone has a different point of view relative to where they are. That's the relativity, relative to your point in the space-time continuum. So I was taking all this information, like the fractals and the price time, and I was thinking about it, and that's how I came out with the idea of fractal geometry, where it's all relevant to your point of view of where you are in the price time continuum, but all information is available. It's all in the chart. So all you're doing is changing your point of view, but the price and time doesn't change. Like it's not like this. How about this? It's not like this. It's not like trading gold futures. When you're trading gold futures contracts, there's this front month, right? You might be trading the October contract, But other people will be trading the November contract. Some people will be trading the December contract. Some people will be trading the January contract. And each contract has its own supply and demand. The supply and demand is constantly changing, and they all have different prices, and people are all trading them for different reasons. Okay? That is not the same as what we do. That's why that's different, and why I look at this as a fractal geometry equation, if you will, a way of looking at mass amounts of data. Imagine all variables in the entire world are priced in, okay? So how you enter your trade is all relevant to the point of view that you're taking. Or is it a short-term point of view? You might want to be on a 1-minute chart, 5-minute chart, 15-minute chart. Is it a medium-term point of view? Maybe you want to be on a 1 hour or a 4 hour. Is it a long-term point of view? Maybe you want to be doing dailies with monthly pivots, right? You see how like the prices in the past are always the same. The time is always the same, but your point of view is different. Okay, so that's the fractal nature of it, okay? So what I'm changing now, let's go back to this. I was changing from which way was I going here? I thought this is 5. I thought I was going longer. I do want to go longer. I want to now try to look at the fractal geometry of the nature of the market and predict where we're going. So it's similar, like, where is your asteroid going? Well, you want to look at the trajectory. So you need 2 or 3 or 4 points in time and get a linear projection. You also, speed is important to these things, or velocity if you're in space, okay? And then you also have to look at the shape of space. I don't know if you know this, but space is not flat. It's got a lot of shape. In fact, if you take 2 parallel lasers and shine them in space, they will cross or diverge. Space has shape, and this is why you can actually change the direction of, let's say, a satellite going towards Jupiter by slingshotting it around Mars. You're actually bending it, right? So long story short, we want to look at the trajectory and the speed and try to get a point in the price-time continuum and where we will probably or potentially end up. Is that too much? So anyways, and by the way, I did work at NASA for 2 summers. So I'm a NASA boy. Okay? And so anyways, going through this is how I'm looking at CAD Swissy on its price-time continuum on the 4-hour fractal. And from the analysis there, I say we're going to end up around here at 76.5. Okay, cool. Yeah, Max says that's called gravity. Well, it's actually mass. It's not actually gravity. It's the word is misused in the media a lot. It's not the gravity of Mars or bending it or picking up speed, right? That can happen, right? But it's more of the mass on the space-time continuum that shapes space, not the gravity of the object, okay? But the actual way that the mass bends space-time. It's more, to me, it's like fundamentals, right? Impacting markets, right? The fundamentals of the black holes of trading, right? So anyway, this is what I got here on the 4-hour. So I take this in mind and I say, on this point of view, that's where I think we are going. That is our trajectory. Okay? Now I can change my fractal. And okay, now I'm on a 15-minute chart and I still have this general theory, right, of where I'm going. But now it's relevant to this time frame, and I have to incorporate sort of the bigger fractal into the smaller fractal. Okay, so I'm zooming in. Okay, and now the bigger picture still exists for me, but now we're doing price action this way. Okay, up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, 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 red flag, up, no higher high, another red flag. By the way, I should be able to give you this and say, draw the oscillator. Okay? Now draw a stochastic oscillator. Now draw a MACD. And you should be able to do it. Sebastian says, don't you see a resistance on the four tops there? Yeah, on this time frame. So on the bigger time frame, you would probably just see something like this. So if I'm on the right, so if I'm on the higher time frame, which means I'm in it for longer, let's say I'm swing trading and you're day trading, I say, yeah, okay, so it's going to come back 30 pips and then go up 100. What do I care? But if you're a day trader, that's going to be a problem. Or if you're a day trader, that might allow you to make 30 pips on the New York Open and then buy it Asia and swing it through London tomorrow. Oh, on the 4 hour? Okay, so again, let's go back to there. Okay. Yes, here is why it's not part of my concern. Okay, you ready for this? I'm a bull. Okay, do I see it? Yes. But based on my bias, this is my plan. So my bias gives me comfort or strength. Okay? Now, if I was a bear, I would be looking to do the opposite. Okay? If I was a bear, I wouldn't be in here, but I might take this because that's a monthly front run. Okay? Risky, but I might do it. If I'm a bear, I would have sold here. Okay? I would have sold here if I was a bear. It's clearly a sell because you got the monthly swing and you got the weekly exit. You see that? In the middle of the week. That is an all-day, everyday sell. Okay? And you know, it worked for a week and a half. Can't cry about that. But then we find ourselves up here. Do you trade the double top? Well, you do on a weekly here. Not only is it a double top, it's the weekly sell zone. So if I was a bear, I would have sold that. Well, it only worked for one entire week. And then here we are. Once again, we're back here. So do I take another shot? Notice where we are on the weekly basis now. This is not a sell zone. This is the sell zone. So my guess is we're on our way to 1.76. Okay, right? I would think that because I'm a bull. Okay, so therefore that means I'm buying it here next week or even Friday. Maybe even tomorrow, depends on what happens today. And therefore, then we're going to do this. And my plan is fulfilled. That's trading volume in a month, Daniel. Okay, so there you go. An impromptu discussion about fractal geometry. Now, the chaos theory part has to do with news. When a butterfly flaps its wings in Indiana, it causes monsoons in India. Everything with emits a tiny particles called gravitons. Yep. Sure. But that doesn't shape space-time. Mass. So you have to think of space-time like a giant blanket, okay, held by beautiful children. Beautiful school children are all holding a blanket, and they're all holding the edges. Okay, you got 50 of the kids all around, they're holding the blanket. And then I come along and I throw a tennis ball on. What happens to the blanket? Hardly anything. Then I take a billiard ball and I throw that on, and it pulls down on the blanket. All of the blanket? No, mostly just around where that ball is. Okay? Then I take a bowling ball and I throw it on the blanket and it goes, blah! The whole blanket falls and the kids are like, whoa! Right? It's the mass that's shaping space-time. Now, mass tends to be somewhat attached to things like gravitational forces as well, but that's not a constant. There's lots of other things that go into creating the gravitational forces, but mass is mass. Okay? Anyways, we don't need to get into that. So we'll do easy things like trading currencies, right? So yeah, I did work at NASA for a couple of years. It was a very amazing, awesome experience. I had to go through checkpoints with armed guards. All that kind of stuff. I had to have special FBI background checks and all that kind of stuff. Of course, for being a regulated entity, I've had to go through massive background FBI checks. And then I have clearance at the airport where I went through FBI background checks. Have had so many background checks, it's amazing. But it was a very interesting job. So this year for Halloween, I am an astronaut. So I have astronaut pants, and I bought them. The pants haven't arrived yet. I bought an astronaut jacket. That hasn't arrived yet. Cutting it close. But I got the backpack, and the backpack's really cool. It's got the NASA logo, big American flag on it, some reflective tape. It's got like giant shoulder straps with reflective tape, and it's got all these things on the side. It's got NASA writing on it. It was really cool. So I got the backpack, super happy with it. So now I got to get the pants, and I got to get the jacket. Hopefully they arrive soon. But it fits my personality. But if you think like if you're taking kids trick or treating, like I don't go with them anymore. I hand out stuff, but safety and security at night is important. So now I would be dressed head to toe in white with reflective, stuff, stickers and stuff all over my clothes, my pants, my jacket. I'll have my NASA hat on and my backpack full of candy, and it'll be very, very safe. Yeah, Michael says, still working on a unified theory for Forex. I'd like to do that. Of course, I'm still in school, but I was reminded of how important it's required to have, and maybe why we don't have a unified theory. So in my managerial finance class, we're doing things like valuations of companies, and should I buy this company? Should we buy that company? What should the stock valuation of this company be versus that one? And what is their sustainable growth rate versus their actual growth rate? And are they burning more cash even though they're profitable? All this kind of stuff. And now we're moving into more of the financing of these companies. And of course, we get into time value of money and the pricing of bonds. And I'm like, cool, right on. I get all that. But, you know, a lot of the other students are newer to that idea, right? They're not they don't have like our kind of finance background. They're more general managers and stuff like that. Anyways, the professor goes on and explains time value of money. Okay, that makes sense. Opportunity cost and interest rates and inflations. And okay, great. Got it. Yep. Dollar in your hand now is worth more than $1 in a year. Got it. That's great. Valuation of cash flows. Got it. Makes sense. And then he goes into like, well, how does this affect the pricing of bonds? And everyone is in class. They're like, I have no idea what this guy's talking about. And so he goes on and on and on. And he tells it from his professor point of view. And I'm like, I've never liked the professor point of view. Not this particular professor, but all professors. So I've done like 30 classes at Harvard now. And I've probably had 5 classes that have taught me bond pricing strategies. And I've never once liked it. And of course, they're looking at it from an academic, esoteric point of view. They're not looking at it from a trader point of view or a market trader or a market point of view or even a finance. They just look at it like they got their PhDs and some PhD taught them about bond pricing and they have their weird PhD point of view. And so anyways, he goes through this and he talks about it. And I'm like, wow, I know a lot about bonds, but that doesn't make sense to me. And then so at the end of the class, like half the class stayed and a guy right off the bat, he's like, yeah, I got questions about this. So the Fed is cutting interest rates. And so the, yields fall and prices fall. And he's like, and I'm like, no, that's not right. And the professor gives his esoteric point of view and all this kind of stuff. And he still doesn't get it. And he still doesn't get it. And people still don't get it. And he's trying to explain it. So the long story short is there's a difference between long run and short run and all this kind of stuff. But when it comes to the unified theory of the markets, which is like, if I were to do a PhD, that would be what I'd want to do. There's a difference between sort of investing and trading and all that kind of stuff and why. But when it comes to this unified theory, the academics that have time to sit and ponder this all day, they have such a strange view of these things. And it's why we don't have an academic, focused, unified theory of why the small things and the big things, why trading and investing and markets and financing and economics, there isn't congruency. And it's just a really strange thing how professors explain why prices go up and down in an inverted fashion to yield. And the way I hear it from the professors is that, to me, they explain it backwards. But to them, that probably makes sense because they're not looking at it from a market point of view. They're looking at it from a mathematical point of view, I guess. But to me, that's not how it works. But that's how they teach it. And of course, the way they teach it, nobody understands. And they're just like, well, I guess the professor's so smart that, that's why I don't get it. And half the time, I don't think the professors even know what they're talking about. They're just rehashing someone else's book, right? Like most experts, they just rehash someone else's book. So it's really interesting. And that's probably why we lack a unified theory of finance and markets. And of course, so if I do a PhD, which I doubt it, because the math gets too wonky and all of a sudden you become the weird esoteric guy that makes no sense. So, but that's why I think the wrong people are focusing on it, asking the wrong questions, looking at it from the wrong point of view. That's why we don't have a unified theory. And it's almost like the unified theory of physics. Like, why doesn't quantum physics and quantum mechanics line up? Well, because we're asking all the wrong questions. Any physicist trying to figure out how to get a spaceship to fly at the speed of light is asking the wrong questions. You don't fly a spaceship at the speed of light. Physics will tell you you will destroy it. Unless it's made out of light, which I don't think we're ready for that yet. But to make a spaceship, but something made out of particles, to send it at the speed of light, you will destroy it. So why are we even asking those questions? Instead, we should be asking, how can we reshape the space-time continuum? If Jupiter, right, if a planet or a star can shape the space-time continuum, well, then we can. You just need massive amounts of energy. But that's the question. How do you make a warp drive? But whatever. Ask the right questions, but generally we don't ask the right questions because we're looking at things from the wrong point of view. So we'll get there in finance. We'll get there. I know it exists. I can see it. Like just the idea that we can take a business cycle, we can take a political cycle, we can take I guess you would call a super cycle, almost like a demographic shift. So we can call that a cycle. And even things like, when do farmers plant? When do farmers harvest? When are the monsoons? When do people go on vacation? You know, all of that stuff is quite predictable and should be put in there. But also things like are mistaught all the time, like that. Like even the idea that finance and economics is taught with one assumption, one major assumption, that people are rational. No one I know is rational, including myself. If I was rational, I would not drink alcohol, I would not smoke cigars. I would probably exercise more. But what I do is irrational. And if people were rational, they would make much better decisions. You would drive a cheap, reliable car. You would have a tiny TV. You would take the vast majority of your wealth, which means income minus expenses, right? So your profit, so to speak. You would take that and invest that into safe, income-producing investments like either real estate or bonds, and maybe a portion of that into a little higher risk stuff like equities. And you would take literally every single penny that you had left over and grow your net worth. But nobody does that. Nobody does that. You're like, no vacations, no junk food, no eating out. Okay? And the only people that do it don't have any money, but they wish they would. Right? So anyways, right? Very interesting stuff. So if you take human behavior, which is behavioral finance, and then you take traditional finance, and then you take trading, and then you take market or trading, and then you take investments, and then you take business markets, all tied into global macroeconomics, the way I look at it is Newtonian physics, that all of these things matter. When did a farmer get a good yield in his wheat in the Ukraine this year? If wheat yields in the Ukraine are low this year, Canadians are going to make money. If you understand that concept, you're like, look at the drought in Ukraine! Boom! And you're buying Canadian dollars and you're buying Canadian wheat. That's all it takes, right? But we're not there yet. We're not there as a species. Mostly because we're asking the wrong questions. Assuming everything's rational, all things being equal. Dude, nobody's rational, nothing's equal. Oh, but you cannot predict the stock market. It's a random walk through Wall Street. I'm like, that might be true. You can't predict the stock market, but I can. The fact that the capital asset pricing model is still taught in universities, that the value of a stock is the future value of its dividend yields, is stupid. That's when Coca-Cola traded like a bond, back when there were only 30 stocks. And right? Right? You bought Kodak because it paid a 12% dividend and the price rarely changed. And you traded stocks like we trade bonds, right? Like, gee whiz. So anyways, I think the markets are irrational, but I think they're predictable if you ask the right questions. So we'll get there, guys. And if I do work on a PhD, maybe we'll work on it together, huh? I'll need to do some primary research and you could be my guinea pig. I'll say, look, I made Max millionaire. That's my PhD. And Max is going to donate money to a children's cancer ward at a hospital, build a new wing, and name it the Wayne McDonald Children's Cancer Wing Ward or something. Something. I don't know. Cool. Yeah, you got it, Max. So anyways, we'll get there. We'll get there, guys. All right, so looking at this, we're very near the end. A little too high, not quite low enough. That makes all the sense. So we're getting late in the month and we're hitting targets on almost everything. So remember, even last week, I started to say, look, some of our targets have been hit. You should ratchet back your expectations. You should not be as aggressive. Okay? And now more things are approaching their targets. The month of October, generally speaking, for many of these currency trades is over. And I was showing you yesterday, like, was it my Lira trade? I'm already in November. So if you're trying to figure out what's happening today, you're already late. I'm already 2 weeks in front of you and I'm already trading them. So this trade here, and I told you yesterday about it, okay? Now, it's on a weekly M3, and you're saying, well, Wayne, that's just a basic weekly swing trade. Oh, I know. Oh, I know. Not complicated. That's pretty straightforward. I get it. Okay, now look at my other trade. It was actually an earlier trade. I traded, I think, this breach and a pullback in that 4-hour candle, and I sold at this month's M4 as a counter trend trade. Okay, so this is the counter trend, and then this is the new trend, even though the new trend is higher than the counter. It's just how it worked out. But this is, to me, is not really a weekly M3. It's not really a weekly swing, because to me, I think this month's trade is dead. You were supposed to take profit here 2 weeks ago. So what is the trade? The trade, now I changed my fractal. The price is the same. The time is the same. It's still now, and that's still the price. Even if I change the time, the point of view, it's still now, and that's still the price. We don't have a different price on this time frame, like a futures contract would have a different price. Okay? But check this out. I'm short next month's M3. So I'm trading my November strategy. That's what we do in the swing trading group. We get you that good. Where you're not thinking about today, tomorrow's passé. Most of our trades are 3-4 days in advance, sometimes 1 or 2 weeks in advance, sometimes 4 or 5 months in advance. So I know what I'm going to do in January. I'm set in stone. Huh? Set in stone. Love it. Better than walking in hopeless night. Wandering in hopeless night. It will hit 6.3. Yeah, I'll tell you where I'm hoping. Okay? In the month of November, I would like to hit basically 6. Okay? Pure mathematics, one piece of news could kill that. Yeah. And I accept that, though, right? right? Pure mathematics. I accept that risk. I can't lose money. And I'm collecting 1,100% guaranteed annual return. So I'm willing to accept that risk. Oh, Joe, we'll get you there, man. We'll get you. But pure mathematics is the one news event can change everything. Well, that's true of really anything. Okay, especially like if you're scalping. Let's say you're trading on a 5-minute chart. A Trump tweet can destroy you. Okay, on a 4-hour chart, right, or a daily chart, or even a weekly chart, you need a black swan event like Turkey being allowed to roll in to Syria, arms wide open to the Russians. You're like, all right, I didn't think that was going to happen. There's your black swan event. Okay? But on a 5-minute chart, it's which way the wind blows, right? So we always face that risk, I guess is what I'm saying, right? To pure mathematics. This is extra especially true with this currency pair. So I don't refute it. But I accept it based on, I mean, how do you normally accept risk when it comes to anything, right? Well, compensation. Right? Compensation. You have to be compensated for your risk. And I'll say, oh, great. Well, for 1,100% a year, I'm okay with it. But I'm not going to be stupid with it either, right? Meaning I'm not going to, how you say in English, I'm not going to let this go up against me. Right? So like I have, missing one, right? There we go. So I have one trade here. I have one trade here. And I have one trade here. Each earning 1,100% a year. And I cannot lose money. Okay. Stack them and pack them. Maybe that's a little better. Have you been stopped out of the... Oh, yeah. Yeah, Max, yeah. But I keep re-entering. So yeah, quite a few. In fact, just the other day, right? We talked about that on Tuesday, I think. There was this big move here, took me out of a bunch of trades, and then I re-entered. But you can see, like, on a swing basis, that's a very obvious trade. I would call that a boring trade, right? But your trading is supposed to be boring. Bitcoin miners hash rate says, I love your style, Wayne. Thank you. Right on. Right on, guys. What time is it? It's late. I've gone on. Well, I guess I had to reboot, so whatever. So what do you think? Is my Rand trade going to work out? What do you guys think? Let me drop into an hour. Okay. Price action, rolled reversals in here, so we know this is the sell zone. A wave guy might say, well, there'll be one more up, right? 3-wave correction and then continuation. Not sure. Okay. Okay. It better. I don't know, but it better. That's a fair answer. I like the way you trade. Mm-hmm. Right? Have you seen the movie Swing Trade? You're like, dude, I think it's Swing Blade. No. It's called Swing Trade. I like the way you trade. Mm-hmm. How does Brexit affect Eurozar? I don't know. Make a movie. All right. So we'll see. The swing trading group, we're going to need to start setting up the peso trade for next month. So we'll probably do that tomorrow. Oh my God! 4 hours of sleep again. Amazing. My God. You guys are probably sick of hearing that I'm tired. What a crybaby Wayne is. I feel like I'm a tough guy, but I know I whine too much. Rand is a useless currency. I'll never forget the time I was checking into my hotel in Johannesburg and some guys in front of me, locals, I don't know if they're Johannesburg, but South Africans. Anyways, one guy's sitting on his phone. He's just, I don't know, playing a game on his phone. The other guy's checking out, and he gets the bill, and his buddy interrupts the guy playing his game on his phone. He's like, "Look at this," and it's the price of it, the hotel. And the guy laughs because I guess it was an expensive hotel. But anyways, right, I'm standing right behind them. I'm just observing, and the guy says, he laughs. Right, he's like, he sees this buddy's bill. He laughs and he says, "It's only Rand." And I'm like, that's it. That's how the locals think of their currencies. Like, that's my experience right then and there. He laughed. He's like, "It's only Rand. Don't worry about it. It's only Rand." I'm like, yeah, he's right. Trying to get this to sit better. That's better, I guess. And then this has to go over here a little more. No, that's... Anyways. What is my philosophy behind setting a stop loss? My philosophy has been the same for many, many years. And if you go on my YouTube videos from like 2004, you'll hear me say things like, my stop losses are put into place to prevent catastrophic failure. An example of that is that if I'm trading and I have a heart attack, and I'm not joking, especially, with client money and stuff. If I'm trading and I'm doing a stressful job, right? If I'm trading and I have a heart attack, I need to make sure that the portfolio, okay, the account is protected from catastrophic failure. So I fall on the ground and I'm incapacitated or dead. That there's a maximum loss, which is minimal. And then if those are hit, the portfolio is taken out of the market. Okay, so imagine every trade I take has a 100 pip stop. My intention is never to get stopped out. You have to understand that, guys. I don't use a stop loss because I'm worried about losing money. When I place a trade, I know I'm right. You have to understand that. I don't know if I'm going to make money, but I know I'm right because I've done the analysis. I have a bias. I do technicals. I know my price. I know my time. I know why I pulled the trigger. I know where it's going. And I have a standardized stop loss of 100 pips, let's say, simply just in case I die. I have no intention of getting knocked out for a 100 pip loss. It's just there in case something terrible happens. Okay? But when I trade, I know I'm right. There's no gamble. I shoot to kill. Okay? No hesitation. But there can be a black swan event where the entire market just pops, right? You never know. There's an attack somewhere. Something horrible happens somewhere. Okay? A leader of a country is assassinated, or there's an explosion somewhere, or whatever. I've lived through all kinds of things, right? So just in case there's a catastrophic failure, I will get stopped out. Now, here's the other thing. When I let my winners run, like you may have heard the stories where I have like 100, 150 trades open, right? 98% of those trades, the stops are at break even. Okay? You let the winners run. If the trade plan fails, you take the loss. You don't wait to get stopped out. Okay? You move your stop. I get out of a trade when I know my trade plan has failed. That's different than being stopped out. I hope you understand that. So if, okay, what should I do here? Let's say I decide to sell this Mexican peso. I'm looking at it right now, okay? And I say to myself, I'm still a bear, and based on my analysis of this entry here, which is less than this, I believe we're going down to the S2. Therefore, I'm going to trade the next 5A cross down off the 4-hour 21. When do I know I'm wrong? If I find myself up here. My stop might be up here. I don't give a damn. My trade plan failed. I take the loss. I'd much rather have an 18 pip loss than take pride in being right. I've trained myself, and I've been training you to teach you to know in your bones that being right is irrelevant to your profitability. How many people are starting to learn this? That your ability to be correct is irrelevant and should not be the thing you focus on. Your consistency is what makes you profitable. Okay? Your consistency, not your brilliance. Right? This has nothing to do with how smart you are. Okay? It's your ability to enter a short trade in a downtrend at resistance. That's all it is. You do not have to be smart. You have to have a half a brain and work ethic. But other than that, being smart is probably a liability. Because you're going to make things complicated. Ask yourself, Are you complicating things? You probably are. You're probably too smart and too good looking. And people have never challenged you because you're so beautiful. And they're just like, oh, whatever you want. Well, now the markets don't care how beautiful you are. And trying to outsmart the market leads to bankruptcy. Okay? You need to be consistent. So when you're consistent and you're wrong, you have small losses. And when you're right, you have big wins. Okay? So like a couple of those lira trades, they were like little pissy little things like this. And now I'm up on this, like nice. Small losers some of the time, big winners most of the time, or break even, right? But there is no break even for me. There is no break even for me. Break even for me is -5. I love losses. I love losses. I love losing. I don't avoid it. I don't hide from it. I love it. Because if my trade plan fails, give me my money back. I say, that's bullshit. Give me my money back. Right? If I sold here and the market goes up, I'll say, what kind of idiot bought it here? Well, of course, what it is profit taking, so I'd never do it. But, if I'm wrong, I'm shocked. And then I'm like, you know what? If someone wants to play that game, if they want to buy there or sell there, they can have it. I'm not interested because that's stupid. And I just pull my money and I wait for a better opportunity. You understand? You understand? That's what I want for you. I actually say that in my book. Take pride in your losses. So when you join my mastermind group, right? When you join my mastermind group, it's probably going to, I'll make up a number, probably be $25,000 a year, plus every time we meet for our annual meeting, you'll need to pay $10,000. But when we get to that mastermind group, we'll do things like pull out your trading history. You're a fund manager now, so you have your trade history. Give it to me. Good. Take me through all your losses. And you'll go up on stage with a PowerPoint presentation and a laser, right? And you'll explain to the group, you're losers. You're losing days. You're losing weeks. You're losing months. And we will go through it. Why? Because this is what you're going to do with your clients to make sure that they're informed. And then we will help you communicate effectively with your client why this makes you a better trader and a safer investment. Or you could be like everybody else and hide it and bullshit your clients and try to cheat them out of their money. But that's not the right way of doing it. And people can smell that a mile away, especially institutional investors that send in due diligence teams. Can you imagine that? A client says, yeah, okay, I'll give you a couple of million. But before I transfer the money, I'm gonna send my guys in. And you're like, what? Yeah, I'll send in my due diligence team to just double check everything's legit. You're like, what? And guess what's the first thing they do? They look for your losses. No, you have to understand that, guys. Nobody cares about your winners. Nobody cares. That's not what wealthy or institutional investors are looking for. They're not looking to make a lot of money. They already have a lot of money. Right? Getting rich quick is a poor person's farce. If you're going to work with wealthy people or institutional investors, you have to understand they already have a lot of money. So you're like, hey, I'll help you buy a yellow Lamborghini. And they're like, that's bullcrap. I got 5. Dude, a friend of mine, he's got something like 30 cars worth somewhere between $200,000 and $2 million each. Just as cars. So what are you going to do? Like, dude, I'm going to help you make a lot of money. He's like, I already got a lot of money. What does that have to do? And of course, he knows you're going to make a lot of money by taking a lot of risk, which sounds like to him, you're just going to lose money. So what do people want? They want income from their assets. Their money is an asset. So they're trying to decide, should they buy an apartment building? If so, right, they'll have an NOI of 8%. What are you going to do? Well, with the beauty of leverage, I could do 22% a year with the same amount of risk. Oh, okay, interesting. Let's go through it. What are the risks? Okay? So you have to understand you're just a small part of someone's large portfolio, sophisticated portfolio. So the idea is the first thing you'll need to do is go through your losses. And you'll need to explain why your losses are minus 18. And you have quite a few of them. You're like, oh, losses are a good thing. They're like, really? I thought losses were a bad thing. No, losses are a good thing. Let me tell you why. Let me show you why. I can prove it mathematically why. Right? You can prove mathematically why 39% of your trades are losers. And why this is the most important reason they should invest into you. Do you understand? And they'll say, oh, okay, yeah. Now it gets interesting, right? So what are you going to do if your average losses are, 62 pips? What's your average winner? Probably 48 pips if you trade like that. And mathematically, it just never adds up. Never adds up. Okay? Never adds up. That's the problem. The way you have been the way you've been trained to trade before you came into my life or I came into your life is absolutely wrong and flawed. But you were probably pitched a sale of making a lot of money very easily and get rich. That's not, okay? That's not how the game is played. Think about hedge fund managers. They're not cowboys. They're accountants. Okay? So anyways, I'll teach you, man. I'll teach you, but you better do the work. You better be more serious than me. Imagine, how often do I get more than 5 or 6 hours sleep? Rarely. And by the way, I'm not one of these people that just wakes up like, yeah, I'm a morning person. Do I have the personality of being like a little bird? My heart's going like crazy. Ooh, I gotta go. I can't sleep. No, I love to sleep in. I just haven't done it for 20 years. Right? I'm hardworking. It makes up for my mediocrity. I think I'm slightly above mediocre, but I have a very strong work ethic. So I'm proof you can do this. Okay? I am absolute proof. When I was 16, I lived in a town with 5,000 people. One street light. Right? Surrounded by wheat as far as you can see. My choices were to get married, which is another way of saying get a girl pregnant. This is Canada, by the way, right? So at 16, Time to get a girl pregnant or become an alcoholic or both. The school bus driver in the district was an alcoholic and everybody knew it. I am not joking. That's how small the town was. The school bus driver would carry a 40-ounce bottle of whiskey in his lunchbox, and everybody knew it. It was okay. And I said, you know what? I don't belong here. I want to change the world. I want sophistication. I want the arts in my life. I want beauty in my life. I want culture in my life. And none of that existed where I lived in that moment. It's 16, right? By the time I was 21, I had a suit and tie, would travel to New York City, and I'll never forget sitting at a boardroom table in a skyscraper on Wall Street in a high-powered law firm, sitting on a board of directors with someone from the United Nations, the CFO of General Electric, the CEO, I think it was Arthur Anderson, hanging out with really super sophisticated, powerful people. George Soros on the board, not long after he broke the Bank of England. Maybe that's where I learned about Forex. I don't know. But the thing is, you can radically change your life. You can radically change your life. And like PhDs and quantum physicists trying to get a spaceship to fly at the speed of light, it's the wrong question. You need to change the space-time continuum. And to do that, you need massive amounts of energy. E equals mc squared. You need lots and lots of energy. That's what the E is. Lots of energy, but you can change the fabric of your universe. I know it as a fact. I've definitely done it myself. But you better have the energy. And by energy, I mean work ethic. I didn't say you had to be smart. I didn't say you have to have there's my macroeconomics degree from Harvard. You don't need that. I just did it to do it. To be an inspiration to my children. That's why I did it. Okay? That's why that's there. You can radically change the fabric of your universe if you simply put the energy in. Do the work. Do the work. Do the work. Do the work. Love doing the work. And the rest is just time. Time to earn money. There's just formulas for that. There's just formulas. If you put in the time and put in enough energy, the rest is just a mathematical formula. You put in that, you do this, and the output is that. Not complicated. So stick with me and we'll get it done. Okay? So I think we should end it here. Would you please leave a like? Would you please leave a comment? Literally in 2 minutes, I will post the link to the recording in this chat. If you wait 2 minutes, it might actually be 1 minute. I will give you the link. Will you leave a comment on the video, please? Will you please wait 1 or 2 minutes after I hit stop the stream? I will post the link. You will click the link. You'll go to the recording. I don't think the recording will play. It'll say it's still streaming, but you can leave a comment. Will you please leave a comment? Thank you. So, from the bottom of my heart, peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow. Da, 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 da. Thanks for being on my team. I appreciate you in my life. You're the best. See you tomorrow. Cheers.